So despite the fall from the highs, that one is a real standout. Now we bring on board Nikhil Ranka, Nuvama Asset Management, joining us this afternoon to give us his perspective. Hi, Nikhil. Been a while since we spoke. Give us your take, trend in particular and retail in general. Would you play that as a trend over the next 12 months from a ideation perspective? Would you play it through trend? Would you play it through some of the value retailers? How should one play it?
So, good afternoon, Harsh.
Very good afternoon.
What has happened over the last 24 months, if you look for the retail sector per se, there was a lot of disruption from quick commerce companies that the traditional retailers were facing. As a result of which, if you look at the sort of revenue growth for the top two retailers, it was closer to 20% in the last 4-6 quarters. And given the fact that stocks were trading closer to 60-70 times 2-year forward earnings, they went into some sort of correction and consolidation mode. Having said that, if growth starts coming back, obviously things could materially improve from here. But we need to see 1 or 2 quarters of growth sustainably sticking around. If we continue to see this 15-16% sort of number, then there is a clear risk that 65-70 times multiples can derate further from here. So I would say, more than a 10-15% upside, because multiples looks very difficult to re-rate from 65-70 times. So your returns will mostly be linked to what sort of earnings growth that you get from these levels in these stocks.
Okay. And is there a tilt that you have, Nikhil? Some of the larger retailers versus some of the value retailers?
So I would refrain from doing stock-specific names, Harsh. I would rather focus more on sector.
I tried the large versus mid-small, but I understand your reservations there. But Kunal, on charts, V2, VMart, any of those at all looking attractive? We've seen some decent returns from some of those names.
Yeah, I think, for example, VMart has done reasonably well from sub 500 levels to now on the verge of knocking the 800 mark. That stock has done pretty well for itself in the last 3 odd months. V2 retail also, I think, from 180 levels initially moved towards 250 mark. It's now settling around the 230 levels. So these stocks overall have done reasonably well for themselves. It's just the mood of the market, because initially it was more focused towards those mid caps and those individual names, and that's where you saw the the trend shaping up very strongly. Now there could be a phase where maybe the large cap stocks or the other sector can start to participate. So I would broadly expect that these stocks may go into a degree of a consolidation, but those dips of 10% broadly from their swing highs should be taken as a good buying opportunity for both V2 retail, VMart, and the entire space.
So that's the outlook when it comes to value retail. Nikhil, hi, this is Snehi also joining in. While we're talking about consumption at large, is there any niche theme that you are looking at within consumption? For example, today, Honasa has acquired a majority stake in the nutraceuticals company, and this seems to be a theme that all the big FMCG players are cashing in on. Anything looking good within the broader end? It could be discretionary, it could be BPC, anything that looks good from the broader consumption basket?
So broadly, if you look at it, for most of the FMCG names slash discretionary space, jewelry is definitely one sector where we have seen growth rates being substantially higher. So, the leader in the sector has reported more than 20% growth rates. Even the smaller names in that sector have shown stupendous growth rates of more than 25-30%. So clearly on the discretionary side, jewelry is something that has done very well over the last 3-4 quarters. In terms of staples, as I said, 5 to 8% growth is something in terms of volume that the street is expecting. And given the fact that most of them have taken 3-4% price hike over the last 6 months, if it's a 6-7% volume growth, then we should look at close to 10% revenue growth for the sector. So that would be some sort of acceleration from the FMCG names as we head into Q1. So that could trigger some sort of re-rating, because if you see, most of the FMCG names have also fallen 10-15% in the last 3 months. So I think there is a 10% or catch-up trade that could happen for the sector. And jewelry, as I said, that is the better bet to take on.
jewelry amid the entire consumption basket, and you do believe that there is a 10% catch-up that needs to happen given the kind of cuts we've seen over here. But Nikhil, what is your take on defense? After the kind of run-up that we've seen initially, today there's been a sharp knock on Nifty defense. It's lower by 2%. Anything that you're liking, maybe not in terms of stocks, but any themes within the defense pack if you're liking? Are you favoring the PSUs versus private defense companies, or if it's the other way around?
So, Sneh, defense, you have to look at more from a longer term perspective because, defense is something where 1 or 2 quarters, if 1 or 2 deliveries get postponed, the whole quarterly number changes and that doesn't give the real picture. But if you see the clear intent, if you talk to companies, there is a clear thrust from the government to increase the procurement from all of these companies, as well as get into more and more diverse areas. Plus, exports have become a big theme for most of our defense companies. We had a news flow also that even Middle East is looking to procure BrahMos missiles from our companies. So in that sense, if you see defense definitely is a decadal opportunity in that sense. But defense requires a lot of patience. You will not have numbers coming from 6-9 months and then suddenly in 2 quarters, you will have a scenario where a lot of deliveries take place and suddenly you will see 100-150% growth. A classic case being, something like HAL where deliveries have got deferred, but once they start coming in, then obviously you will see numbers sort of getting in because you are looking at 7-8 year order backlog for those guys. So we are positive on defense. We think that the opportunity space is very big. And given the way things have panned out of late, most of the countries are looking to up their defense expenditure, which should benefit our defense companies.
Okay, so that's on defense. Kunal, on the charts, anything looking good from the defense space? We've been speaking of MTAR Tech every time it's given a big outperformance. And then the last week where we've seen a couple of days where MTAR Tech was under pressure, then you had that clarification coming in from the management and then the stock ran up once again. MTAR Tech particularly today is once again under pressure. We're seeing about a 4% cut on that stock if I'm not wrong. Yes, 4.3% low is where that stock is. Kunal, a quick chart check on this one.
Yeah, so the setup is not very attractive on the weekly chart. So, what had happened was the stock initially made a high in the month of May, around 8,450 mark, fell down, towards the start of the month of June, around 6,100, 6,200 kind of a levels. And from there, the stock went back again towards making a new high of 8,700 mark. And now, back again on the lower side. Now, in the process of these 4 major points for MTAR Tech, the indicators for the stock on the daily charts have shown a divergence. We call this as a bearish divergence as a setup. With every passing move where the stock prices are moving up higher, if the indicator starts to show signs of correction or cooling off, that generally is considered to be a sign or an initial zone where there could be more selling pressure into the stock price. Now we look at this on the weekly chart setup also. The weekly charts have shown signs of a reversal confirmation on the indicator front. So on the back of these data points, even though I think the prices have moved up higher for MTAR Tech from those previous lows of 6,200 odd levels, I would still not be very bullish on the stock at the current juncture. My expectation is that maybe I think there could be a point over the next 1 to 3 months that there should be a retest of that 6,000, 6,300 levels at least for MTAR Tech. So a slight bearish expectations for the stock price over the next 1 to 3 months.
Wow, 6,300 will be tough to digest. 20% lower from here. Well, that'll be a tough one. Anyway, we'll wait for that. But it's the mega ET Now exclusive with the RBI Governor Sanjay Malhotra, who defends the central bank's intervention in the forex market, says they will let the rupee be determined by market forces, but intervene only to curb excessive volatility. Listen in.
We in the RBI, we do not pursue or target any particular price level or even a band. The rupee has to be determined by market forces, and we let them, let the market forces determine what price it should have. And believe me, this is our policy. This is not only our stated policy, this is the actual policy. We intervene. It doesn't mean that, I'm not saying that we do not intervene. It doesn't mean that we do not intervene. We do intervene. But it is primarily to allow for and ensure that there is an orderly movement in the forex markets, so that there is no excessive volatility that gets into the markets. That's the primary reason of our intervention, and you would have seen that rupee, there has been, two-sided movement. If you were actually targeting a level, then, we would not have at least allowed for the appreciation of the rupee, and we would have, contained it. And you have seen it time and again. In May, June last year, in 25, rupee, appreciated, having gone down to about, I think, 86, 87 levels. It came back sharply by about 3 rupees. And now also, it has it has strengthened, rupee has strengthened by about 2.5 rupees or so. And so it's determined by market forces, and we genuinely believe that it is for the markets to determine the prices. However, at the same time, it's important that the movements in the rupee are orderly, they are stable, there is not an excessive speculation that is getting built into it. And so we take necessary, use our tools, which we have, in case we have to ensure that.
That's the word coming in from the RBI governor exclusively to ET now. Some other very interesting key takeaways from that conversation is when the RBI governor said that they would have changed the stance from neutral to restrictive if they were preparing for a rate hike, which is not the case right now. He also very categorically said that it is premature to talk about a rate hike right now, and also that there is no sign of rushing into tightening anything at the moment. So while that is one of the biggest key takeaways that we've heard from this conversation, Nikhil, I want to take that point ahead with you. On one hand, you've got the top boss at the RBI saying that it's premature to talk about a rate hike right now, which means if I translate that for banks, we're not looking at any NIM expansion immediately in the near future. What, in your opinion, has led to this run-up that we've seen in banks, and how sustainable do you believe this move is, both for the PSUs and the private banks?
You look at it, the FCNR window has opened, and the initial expectations are that close to $50 billion can get raised through the FCNR deposits. So on an overall base of 300 lakh crores for the banking industry, if we are able to raise close to 5 lakh crores, and that would predominantly be by the large banks, which could be closer to 150, 170 lakh crores base that they represent, then you will see a kicker of close to 3% deposit growth in Q1 and broadly Q2, I would say, because Q1 we are ending in that sense. So from an 11% growth number, the deposit number could start looking more like 14, 15% in Q2. And then, if the deposit problem is solved, obviously loan growth could be closer to 17, 18%. So that is what the market is starting to build in banks, that some of the large cap names can potentially see 17, 18% loan growth in Q2, and the base then starts becoming favorable. Second, if you look at the yields at the peak, when the crude was closer to $110, yields had moved to 715. Today, we are back to 682. So to that extent, treasury losses would have also reduced for the banking sector in that sense. So I think these 2-3 news flow combined are pretty positive for the sector. And finally, valuations are extremely compelling. When we had that selling of close to 2.5 lakh crores in the last 4 months, almost 50% of that selling was concentrated in financials. So financials bore the brunt of majority of the selling. And now that selling has ebbed from FIs and news flow is turning positive, we should see a swift recovery in banking names as well from these levels.
So all of that to be kept on our radar. But, the other piece that you want to keep on your radar is on the textile names. And Kunal, you're seeing some very good strength on some of those names. By the way, viewers, if you haven't caught the conversation, you should. Because we spoke with head of research at Motilal Oswal yesterday, Siddharth Khemka, and he spoke about how there's an initiating coverage note, how they are bullish with regard to some of those textile names. Those names have flown in trade yesterday and today. Kunal, how do you play this theme?
Yeah, I think the theme has done very well. Harsh, I was actually looking at the charts for, Arvind. We were discussing, I think, Welspun Living yesterday also. And then, Gokuldas Exports and so many of the other names on the textile front, which have apparently done very well for themselves. For example, names like Gokuldas Export, the stock was almost at 650 just about start of this month. And now it's knocking on the way towards 850 plus mark. And that's a stellar, 30-35% kind of an up move in a very short span of time. And when you try and compare this with the Jan-Feb lows for these stocks, it's almost like a 50% return for many of these names. So it's been a stellar last 2-3 months for many of these textile stocks. The fact that these stocks are continuing to ride up higher, volumes being chased, momentum being on the stronger side for these stocks, I think indicates that the trend is here to sustain on the upside. It's difficult to give a buy at these levels for many of the textile names, but the best part is for traders who've been holding on to those stocks from, say, slightly lower levels than what it is trading right now. It's a very good strategy for them to try and trail the stop losses and keep on riding the trend on the upside.
Okay, so that's in some of the textile stocks. The outperformer today from that basket is KPR Mill. It opened with an uptick of 11%. It simmered down slightly, but nonetheless, a 7.5% jump is what we're seeing on that one. In fact, the conversation that Harsh was talking about with Mr. Siddharth Khemka of Motilal Oswal, we've managed to pull out a little snippet of that chat for you. Listen into what he had to tell us.
Gokuldas Export could be our first choice, but I think Indocount could be the second choice if we see the US retailers normalize their ordering activity faster than expected. Gokuldas, we are seeing higher capacity addition, and because of which the utilization improvement can be faster if the incremental orders come at a much higher pace. There is a lot of operating margin that Gokuldas offers, and hence with the increasing capacity utilization, the net profit growth could be much faster.
Okay, so that's the word coming in from Siddharth Khemka of Motilal Oswal in terms of that initiating note that they had released yesterday, and we covered it yesterday evening itself. But let's take that conversation ahead. Nikhil, your read-through on this sector. While on one hand, you've got delayed monsoon and maybe cotton sowing this year could be slightly under pressure. On the other, you've got a whole barrage of FTAs and trade agreements that India is signing with a lot of countries, and that is boosting textile exports, or rather is expected to. How are you looking at this space?
So, post the US tariff issue, a lot of stocks in the sector had got battered down significantly. Now, those tariffs have reversed, and we are also talking about a UK FTA in that sense. So, to that extent, there's a relief rally that's happening in the sector. Prospects are looking to turn up again. And that's the catch-up that most stocks are playing, after having fallen 30-40% from the peak. Given the fact that new opportunities will open with the UK FTA, that is what the market in the near term is trying to price in most of these stocks, is what my sense is. The opportunity on the UK FTA side.
Yeah, and then the EU FTA as well, right? You've got that as well at the end of the year. But you believe this is going to be multi-year in terms of the tailwind and in terms of earnings? How much of the and because some of these stocks have already run up, which Kunal was highlighting, how much of that run up is already penciled in? How much yet to go? If you can just give us an indication of how you're looking at that.
I think almost 60-70% of the move has got captured in the stock. In the stocks, you are left with the last say 10-15% in that sense. Majority of the move that had to happen, in my view, is almost got captured in the stock prices.
Realty, Kunal, we promised viewers that we'll give them a sneak peek into how you're looking at it. Hemin came in earlier and said that, sell off 1/3 of your portfolio, buy Realty. How is it that you're looking at that?
Yeah, it's a good sector to be. In fact, I think a couple of months back, we highlighted that real estate index had been beaten down massively, when the index was almost at 660, 680 kind of a zone. And from there on, we expected reversals for many of the real estate stocks. To the first degree, we saw the likes of Godrej Properties, Oberoi Realty, Prestige doing very well. And now in the second lot of the price uptrend, you're seeing the likes of, Macrotech developers, TLF, Sobha, etc. Ajmera, many of these mid-cap names are also trying to make a comeback. So I strongly sense that this could be a trending move for the real estate pack. And the best part to look at is that the risk on appetite move. Whenever the market gets into a risk on appetite mode, when the sentiment is positive and the news flow subsides, the negative news flow subsides hugely, that's generally a very good time where real estate sector does very well. And I think we've hit that zone for our markets, hopefully. And with the slew of negative news flow ebbing off, I think there could be a possibility that these real estate stocks should see a very strong up move. My preferred lot from the real estate pack would be the likes of Oberoi Realty. Even at current levels, Godrej Property continues to be one of the stronger bets, and the new emerging breakouts on the short-term charts are the likes of Prestige.
Okay, we've got about a minute and a half left before we wind down. Kunal, quick view on how the markets could look tomorrow. There was immense pressure in the market yesterday. Today we've managed to recover, and tomorrow we've got again that Sensex expiry at play before the market closes for the week, because Friday is going to be a holiday. What could be in store for us tomorrow?
Net, I think we've managed to hold on to that 24,000 level. So that's where I would probably summarize that over the last 2 weeks, last week specifically, and today, this week, so far, we've managed to just about hang around to this 24,000 levels on the Nifty spot. My expectation is that tomorrow also, I think we will just about try to fluctuate around the 11,000 mark, 24,000 mark for the Nifty on the spot levels. For the Bank Nifty, it could be around 58,200.
Nikhil, one top idea for the next 12 months, very quickly.
I think telecom sector could be the dark horse for the next 12 months. We have the mega listing coming up, and expectation is that just after the listing there should be a tariff hike. So I think telecom is a sector which is insulated from geopolitical issues, and that is something that I expect to do extremely well over the next 12 months.
Excellent. Nikhil, thank you so much for joining us, giving us that perspective. Kunal, thank you. We'll let you go on that note as well. Some decent moves on the Nifty. Of course, we're all